Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over the market, let's go over Tesla, let's figure out what is happening and what we can expect moving into the rest of this week. It's a bit of a shorter week, don't forget. I believe the only change, if I'm not mistaken, is Friday is pretty much a half day. Correct me if I'm wrong, but nonetheless, let's get into it. Tesla closing the day up about 0.6% on the day, which is putting us at about $235.50 per share, which unfortunately compared to the market is a slight underperformance, we'll say, right? QQQ being up about 1.2% roughly on the day, which is a pretty decent performance. I mean, the market just absolutely soaring, while Tesla today, for the most part, honestly, actually, for the vast majority of today, did absolutely nothing. It was sitting at pretty much 0%, like up and down, like, I don't know, like 0.05%. It was literally flat the majority of the day. But towards the last about hour, we finally got a little bit of a spike, right? A little bit of a push finally to the green. But nonetheless, still pretty boring. Still not a whole lot. But let's try to figure out regardless of what we can expect moving forward. So with that being said, the main thing I'm looking at here is pretty simple, right? I've been talking about this for a while, and I'm still going to talk about this until, of course, it decides to really pick a direction, which, of course, is going to be this orange line up here, which is the 50-day moving average. Below that, we have the yellow line, the 21 EMA, right? So those are the main two I'm looking at as of right now, right? Until Tesla can break above one of those and hold, more specifically, hold and like continue holding, right? That's going to be kind of what I'm looking at, right? Now, again, I think there's a higher chance we go up more than down. But again, the way I look at it to the downside is if Tesla pretty much doesn't drop below 21 EMA, at the moment it's about 227 roughly, right? As long as we don't fall below that, or at least like 225, 227, those two are like the important ones, if you will, because if we break below 225, we essentially don't turn this old resistance into a new support. We already did once over here on Friday's candle, but I want to continue doing that. That's important, right? If we start falling below that, then we're starting to break through what should be a support, which isn't great, because then, of course, assuming we close below it, well, in theory, it turns into a now resistance, and that makes things a little more difficult and complicated and annoying, I guess you can say, right? But however, if that were to happen, and let's say we were to go slightly below that and close maybe slightly below that or somewhere around there, we do have the 200-day moving average actually sitting at about 223 roughly almost at the moment, right? Which should also act as a very powerful support, which is something else to consider as well as a support. So there's a lot of support below us: 225, the 21 EMA, 200-day moving average. All those should, in theory, of course, act as a support. If not all three of them, maybe if one layer breaks, we go to layer two, etc., etc., etc. So that's the main thing I'm looking at in terms of to the downside. Again, if we break below all three of those, and let's say we break below 220, sorry, I got something in my eye. Let's say we break below 220, right? And we start closing candles, daily candles, ideally below 220. That's where things start getting not great. Let's just say that. The bullish thesis for a potential, beautiful rally towards, the last week, let's say, of this month, and potentially a Christmas rally or like a Santa rally, right? Those things start looking a lot bleaker and not as great. So, if we break below 220, let's say roughly, and we start closing candles, well, then I think we're going to be making our way back down to the low 200s. And potentially, honestly, it might even bring back the bearish thesis of it potentially coming back down to like the 180s, right? That's, of course, a big if, right? It's not impossible. It's something that I am personally considering, or else I'd be all in right here, right now, buying shares at this price, literally all in, right? But I'm not. I have cash ready in case, of course, something like that, unfortunately, does happen. However, with that being said, like I said, I also think there's a higher percentage, at least in my opinion or in my view, that we go up, right? And the way I look at that is as follows. If we break above the 50-day moving average, which is sitting at just shy of 240, that's step number one, right? Step number two, let's go ahead and remove this here and bring this back here, right? Is going to be breaking above pretty much just shy of 240, 50-day moving average, breaking above the 240 to 242 resistance, which is what we kind of did on this candle. We closed pretty much right at the top of that resistance, but nonetheless, breaking above that and closing candles above that, right? That's number two. And again, holding, more importantly, holding. Like this candle kind of looked pretty good. Like we broke above, we closed above, it looked potentially pretty decent, right? We closed like right at the top part of the resistance, but it was pretty good enough. Then the next day we just fell right back down. That's kind of what I mean by holding, right? You want to see these kind of candles instead of being like this, you want to see it maintain above, right? That's important. We didn't, right? So that's what I mean by holding. But moving along, break above 50-day, the break above 240 to 242 is a step, kind of like a similar step because they're around the same level. But then after that, I want to see a break above this 100-day moving average, which is sitting at about 248 as of right now, right? But this is where things start getting interesting, because we have the 248 roughly 100-day moving average, right? We have this 250 resistance, we have the 255 resistance, we have the 260 resistance, or like 262 to 260, right? But more importantly than that, we have, of course, the retest of this overall bull flag. Now, if we zoom out a little bit over here, you can see that this bull flag that we're in right now is pretty much identical, or very, very similar to this bull flag that we were in a few months ago, right? I saw this, someone posted this on Twitter or X, and there's a lot of resemblances here. Now, there's a lot of lines. Let me get rid of some of these lines so it's not, you know, just annoying to look at, because right now it's kind of annoying to look at. Now, massive rally into a bull flag, massive rally into a bull flag, right? We have the same kind of rough touch points, right? Touch point 1, 2, 3, 4, 5, 1, 2, 3, 4. Now we're approaching, well, 4-ish, right? And then we're approaching 5. I guess you can technically, if you really want, because technically we had some candles that went below, you can technically make the argument. I need to unlock this quickly. Let me do this very quickly, right? The fact that maybe this bull flag actually looks like this instead, right? Where, you know, we actually had the touch point there, and this one candle down here was just an outlier, which is very possible. The fact that it's only one candle that was just outside of it and closed outside of it, making that an outlier, in my opinion, is fine. Like, you can technically make this argument, right? And then in that argument, we have touched point 4, 1, 2, 3, 4, and now we're coming up to 5, right? So you absolutely can make that argument. So for now, I'll lock it like that, but just, you know, FYI. But the point I'm trying to make here is the fact that it looks very similar. They both have this gap over here, right? You can see here, massive gap down. That might have been on earnings as well. Yeah, it was also an earnings gap down, right? Same exact situation. Here, earnings, boom, gap down, came down, touch point 4. Earnings, boom, gap down, touch point 4. Massive rally, or like somewhat rally over here into sideways consolidation. Somewhat rally here into sideways consolidation, and then massive rally breakout, and then we continued. And then that same thing can happen here. Massive rally breakout, and then we continue. Just saying, it doesn't have to happen like that, but there's a lot of similarities, especially with this earnings gap down to the 4th touch point, into a rally, into some consolidation. It looks really darn similar, you know? So just take that for what it's worth, right? Just, you know, again, just food for thought. Obviously, in stock market, like, it doesn't have to completely exactly and utterly repeat itself, like, to the T, but history often rhymes, right? That's usually kind of the saying in the stock market and all that stuff. So take that for what it's worth as well. That's important to kind of understand. But like I said, you know, if we come up to this touch point over here for the 5th touch point, which usually is the one that kind of breaks above it, that's where it's important, but it's going to be sitting somewhere around the low-ish 250s, right? If we break above the low-ish to mid 250s, we break out of this bull flag, potentially come up to retest this blue line, which was initially, or I guess previously, this massive channel that we were in, right? You can also make that argument that we never technically retested at. That's still kind of the bearish argument. The bears can still make the argument, the fact that this is just going to be a massive dead cat bounce from all the way up here, boom, massive dead cat, and then we continue going back down, and all we do is retest this breakdown, which is this blue line from this massive ascending channel that we were in for like months, I think, right? So that is an argument. But if we break back above it, which is going to be somewhere, let's say it happens, you know, late November, early December, something like that, will be pretty much 260. So we'll see. Again, you know, that's where things will start getting interesting, and that's where a lot of resistances will really start coming into play, and we're going to need a really nice push to break above those. But if we do, very bullish. So take that for what it's worth. We're going to be in some, you know, very interesting situations over here if we break above those levels, like this 250 level, and then we kind of go in between. Do we break out this bull flag and it's good to go, or are we just retesting this massive channel that we broke out of, you know, a couple months ago or whatever it was? So, you know, which one is it, right? That's going to be interesting, and that's what I'll be looking at. If we zoom out a little bit further, you can see on top of everything else, we of course have this red line that which is a downtrend since all-time highs that we're still in. That we've touched point, right? One over here, we touched here, we touched here, we pretty much touched over here, we've touched over here. So, you know, there's several times that it's resisted us over and over and over and over, and that is like the ultimate. That's like the final boss. That is like the downtrend to break. That is like the level that the bulls want to break and the bears desperately don't want to see broken. As of right now, it's sitting pretty much around that 260 to 265 level. Like if we do, it's again sometime like early December, let's say, it's around 265, right? Roughly, of course, give or take, 260 to 265, which will kind of line up with this blue line you can see over here, right? As we potentially come up into it. So that'll be extremely crucial. And if we break above that, not only do we break out of this bull flag, we broke back into rather this blue line, which was that ascending channel, which is rare, but it's possible. That's what Netflix did. If I'll show you really quickly here, right? Netflix, massive channel, broke down below it, came up, retested it successfully, went down even further. Earnings was phenomenal, blasted right back into the channel, and so far it's been exceptionally bullish, just rocketing up. Same thing can happen to Tesla, right? If you make this argument, same exact thing can happen to Tesla with this massive channel. Like I'll just redraw it quickly just for visual purpose, I guess. But this massive channel that we were in, we broke down below it and potentially come right back into it, right? It's not impossible. It's technically unlikely, but it's absolutely not impossible. And I just showed you an example of where it did happen at a pretty impressive scale. So take that for what it's worth. But like I said, that'll be the most important level to pay attention to if and when, I guess, we get there, which I think we will. But this like 260 to 265 will be like the most crucial level, right? If we break above all those things, the bull flag, the blue line back into the channel, and the red line, the overall descending, channel, if you will, or like since all-time highs, which is all the way over here, this red line here, it's incredibly bullish. Like that'll be like the most bullish situation that Tesla can ask for, and I think Tesla will go on an unbelievable run. I really do, but it's a lot of ifs and a lot of work to do to get past those, of course. But again, if it happens, I wouldn't want to be a bear. Let's just say that. I would not want to be shorting this thing. So anyway, that's kind of what I'm thinking, and that's kind of what I am seeing as of right now. We're just waiting for the break below the 21 EMA or above the 50-day moving average. And from there, we continue in that respective direction. So with all that being said, thank you so much for watching. And as usual, I'll see you tomorrow. Peace.